Hey everybody, welcome back to the Optometry Money Podcast, where we're helping ODs all over the country make better and better decisions around their money, their careers, and their practices. I'm your host, Evon Mendrin, certified financial planner and owner of Optometry Wealth Advisors, an independent financial planning firm just for optometrists nationwide. And today's episode marks the very last episode of 2022, and it's hard to believe that the year has flown by already. And with that, I want to do a holiday rewind to a popular episode from earlier this year featuring Weisz, owner of For Eyes Bookkeeping. Wade and I dove into everything that practice owners need to know about managing the books for your business, and hopefully this is helpful as you've spent some time at the end of this year reviewing your financial statements for 2022, looking at how the practice is done, and as you go into 2023, with your personal finance and your practice goals, reviewing your financials along the way. And with that, as the year comes to a close, I want to give a huge thanks to everyone who's been involved in the podcast this year as I've gotten it up and running. Want to give a huge thanks to the guests that have joined me all year and shared your wisdom. Thank you, listener, for taking your time out of your busy day to follow along and listen to the show. I really hope it's been adding value to your life and helpful, and I'm really excited to go into next year and making this a better and better resource for you and for the optometry profession. And if you have any questions, of course, feel free to reach out at Evon, E-V-O-N, at optometrywealth.com, and check out the show notes in the Education Hub on my website for this episode, optometrywealth.com. And while you're there, feel free to schedule a no-commitment introductory call as the new year begins, and we can talk about what's on your mind financially, and you can learn about how we help ODs nationwide master their cash flow, plan around taxes proactively, and proactively monitor every aspect of their finances. And one thing I wanted to say as sort of a holiday gift is that I talk a lot about measuring the health of different parts of your finances, and I get questions about how exactly I do that. If you want to get access to the dashboard that I use with clients and that I use personally to track financial data and to assess sort of the financial vital signs of your financial health, I put a link in the show notes for you to get access to that dashboard and to that app. It's a holiday gift. You don't even have to interact with me if you don't want to, but I've opened it up for the listeners of this podcast. So hopefully that's helpful to you. Let me know if you have questions about anything there. And without further ado, here is a replay of my conversation with Weisz. And welcome back to the Optometry Money Podcast. I am your host, Evon Mendrin, and on today's episode, I have yet another phenomenal guest. Would love to welcome to the show, Weisz, owner of For Eyes Bookkeeping. Wade, thanks for coming on.
Oh, my pleasure being here, Evon.
I am excited to talk all about the riveting topic of bookkeeping, a lot of it from the perspective of maybe an early practice owner, some of the basics of what they should know about their books, the financials of their practice. But I also want to talk about some things to look out for, to kind of give you a feel for whether they're accurate or not, and we'll talk about other things from there. But before we dive into that exciting stuff, I just want to get your background a little bit, because you didn't start in bookkeeping and accounting. You actually came out of optometry. So what is your background?
Okay, my background. First of all, before I give you my background, I love the words riveting and exciting, because usually those are not terms that are associated with bookkeeping. I have people saying, you literally do the most boring aspect of business ownership. You're worth your weight in gold. So
well, I didn't want people to stop the podcast before this part, so I wanted to get it a little bit exciting, you know.
All right, I'm gonna help you out here. I'm gonna try to be riveting and exciting for your listeners, okay?
All right.
We'll see how much we have to edit after we record this, right? All right. So let's get into it. My background, basically, I was a humble optometrist for about 25 years, a little bit more than that. Graduated from SCCO, it was called that time, back in 1992. Spent, like I said, 25 years over owning a variety of private practices myself. I had one with a partner. I had one with my then ex-wife. I've also worked in corporate medical settings, optical settings, side-by-side, one-door state, all this other stuff. So that's kind of my background. And to tell you the truth, I kind of married my background with my love of the riveting and exciting topic of bookkeeping. So that in a nutshell is kind of my background.
Got it. So you took the natural career progression of every optometrist, right? You start out in a practice, you own a practice, exit, and then you get into bookkeeping and accounting, right? That's usually how it goes.
Yeah, you know what? That's so common. I'm such a cliche, right?
Right.
Let's put it this way. I have been getting a lot of comments from optometrists who want to do that, but then never land on a second career type of thing.
Oh.
And kind of like I did, I got lucky. I literally took a bookkeeping course because I love to do it, and it naturally matriculated into me going away from optometry into something that I liked.
Interesting.
Most optometrists, after 15, 20 years, 30 years or whatever, maybe even before that, they get a little tired of the repetition. It's more common than you may think. I was fortunate to have a landing spot. Some don't, and they always get asked about that. So,
yeah, interesting. So what is bookkeeping? Like what does that even mean? Why is it important for a practice?
well, basically, bookkeeping is, gosh, how should I define it? Well, the IRS defines it as a legal requirement to run a business. Okay,
It's a good step.
I know, right? I know. Now that I've scared everyone, everybody's like, "Oh my gosh, the IRS, stormtroopers are going to come in." Well, obviously, the IRS says you have to keep books. Every business in the world, whether it's optometry or whatever profession, you have to keep a set of books. Well, what is a set of books? It's a list of transactions organized in one space to show things like what I know we're going to talk about later, to show up on various financial reports. 3 key financial reports, and you're probably going to get into this later, are your profit and loss. Just a real quick note on that. Profit and loss is not the official title of that report. It's actually more called an income statement. But I think over the years, the colloquial way of saying what is a profit and loss is an income statement. So the two are exchanged they're exchanged without any differentiation between the two. So if somebody says income statement, it's the exact same thing as the profit and loss. It'll show income, expenses, and give you a net profit. Okay. So, what was the question again? What is bookkeeping?
Yeah.
Basically, you're going to produce those 3 reports to show profit and loss, get a net income that the IRS can tax you on, and then you can also show your valuation of your practice over on the balance sheet to show assets, liabilities, and equity holdings in those particular accounts. If you really want to confuse people, those 2 reports are combined in what's called a statement of cash flows, where it actually shows not necessarily only profit and loss, not necessarily only balance sheet, but they combine the 2 to show actual money movement in and out of the business. That's the purpose. That's what bookkeeping does.
Yeah, I mean, you think about all the different stuff that's happening in a business, right? Cash comes in, money comes in through collected revenue, or it comes in through debt if you're borrowing money, or maybe the owner's contributing capital. So money's coming in, and then money's going to all these different places. It's paying for vendors, paying for occupancy costs, paying staff, maybe other optometrists, and then and then the money's buying an asset. It's either sitting as cash, it could be purchasing equipment, or you're going to see debt. So this bookkeeping keeps track of all this stuff that's happening, not only for IRS purposes, but also for just so you know what's happening in your business.
The cool part, I'm sorry if I could interject. The cool part is it's not just for IRS purposes. I have kind of found, I niche in optometry. Yeah. My whole client base is solely optometrists. And what I've found is that I got kind of lucky because there is not a whole lot of bookkeeping out there, but there are so many entities with not just the private practitioner or the corporate owner or whatever type of optometry modality the optometrist is practicing in. Those financials and that financial data is of interest to loan people, landlords, private equity, young optometrists coming out of school saying, should I come and work for this or that doctor? How much are they making? Production bonuses based on work done, whether or not that person becomes an associate to buy into the practice. You have the valuation. So if you really want to know the power of bookkeeping, is that it affects just about every financial aspect that an optometrist will have to deal with as an owner of a practice. It's think of it at the practice as the axle to which everything spokes out of, and one of those spokes is personal life. We didn't even talk about that. So in order that because bookkeeping is so disseminated amongst all these different entities, it's so important that that information be correct, because it's not just the practice that relies on it. It's literally everybody who comes into contact with that practice. You might as well make those numbers correct to make better decisions for everybody all around.
Yeah, that's an interesting point. I mean,
I'm a bit passionate about this, so I love.
We can tell, yeah. And that's a good point. I mean, it tells the story of the business in numbers, and there's a lot of different people that are going to want to read that story for all their different reasonings.
You got it.
So you mentioned those three statements: profit and loss or income statement, balance sheet, and statement of cash flow. You mentioned a little bit about them already, but what does an optometrist practice owner need to know about those three statements?
Okay, boy, you got some time here. Well, I'll tell you what they're most interested in, and that's
loss, right?
You got it. And to a large extent, I always joke that optometrists don't know anything about their books except that top line number, what they did last year, that annual gross revenue, and then after that it gets boring. So, how much did you last year? Oh, I did 1.2. Well, how much percentage was your payroll? I don't know. How much you take home in distribution? I don't know. What was your liability? How much debt to asset ratio? I don't know.
Yeah.
So I think that kind of goes to your question here. Those statements are used as more information. Okay. I already alluded to the profit and loss. You can take the information from that profit and loss, and you can start looking at the individual numbers that make up that top line versus bottom line. And you can start picking out, okay, I need more revenue. I need less expenses. My payroll is off. My cost of goods. Those are pretty much the main areas that optometrists look at. This is a long answer to a question. I'm trying to condense it here. Mm-hmm. I would say the four main areas of a profit and loss are top line revenue, and probably the individual components, production components of that top line, cost of goods, payroll, and then all of the other business expenses that go to your bottom line to give you that net income. Okay. Yeah. So those are the things that you should look out for. Balance sheet. Balance sheet is important when it comes to valuation, knowing things like your debt, how long that debt is there. And I'm really glad that you said it's a story, because when you keep an accurate set of books over time, you can take individual screenshots or snapshots of that moment in time, and you can compare it to this moment in time. And there's another very valuable thing with financials is now most optometrists will say, okay, 5 years ago, I was doing 800,000. Now I'm doing 1.2. Okay, so I'm growing. Well, that's not the full story. It's context, right? Everything that we've learned about context in the last 6 years has been, you're just taking a snippet. So if you're only looking at top line, you don't know anything else. So my point here is that you take all of these three financial statements and you make a decision with the full scope of all the context. And then you say, okay, I did this, but I have this from this other statement, and I really have this. When your bookkeeping is done, up to date and current, accurate, and when you can get those three statements to be accurate, now you got something to not only track progress, plan for the future, but literally know where you are in time for any time period that you want. Does that answer the question?
Yeah, that's an interesting point. And that, like, you can't look at one of them just in a silo, ignoring the others. And you're going to look at one and ask questions like, why? Why did this happen? Well, you can often find the answers by looking at one of the other two. And you're looking at, for example, a balance sheet, comparing it to 6 months ago, and you're going to notice, well, the cash changed dramatically. Well, you can look at the statement of cash flow to see, well, what actually happened with my cash in that certain period. Yep. based on the certain activity. So they are a combination that should be looked at together. And when you think about just the profit and loss, I mean, you can have a million, just thinking about the expenses, for example, you can have a million different categories of expenses down to every little dollar. But you also see there's some commonly accepted categories of expenses that you'll find. Cost of goods sold, occupancy costs, staff costs. You'll find these, and you can find like median percentages as well. Like what do you usually recommend, or would you like to see in terms of the number of different categories in those expenses, and what are some of the key ones they should have?
I would look at top line revenue and try and bust that out by production. And usually that production in an optometry office is by CPT code. Okay. The problem with bookkeeping is that most of those numbers are over in the practice management software. Yeah, because practice management software is really good with revenue, inventory, not necessarily assets, but accounts receivable, those types of things. And then you can, there's a disconnect between the revenue heavy practice management software and QuickBooks Online. Okay.
Okay.
A lot of times we have to bring those in. So to your point, what should you look at? You should kind of start over in your practice management software first to see what the revenue breakouts are. Now, we do try and bring those revenue production numbers as best we can manually into QuickBooks Online to try and give them a good picture, but I'm not going to sugarcoat it. It's difficult. I've worked with a couple of back-end companies who produce these types of fantastic dashboards. You all probably know who I'm talking about, where it breaks out your chair time, revenue per patient and all this other stuff. But it's very, very difficult to put time onto a spreadsheet or a balance sheet or a profit and loss. Okay. So anyway, what should the optometrist look for? Start over in your practice management software. Take the relatively less detailed amount from your QuickBooks with a grain of salt, knowing what made up those numbers over in your practice management. You've already alluded to cost of goods. Everybody knows that. I got to get my cost of goods down. Cost of goods, to tell you the honest truth, is difficult to reduce. And I'm gonna say it right now. Everybody puts a little bit, my opinion here, puts too much emphasis on cost of goods. And here's why. Because in order to reduce cost of goods, you have to change product type. Or if you want to get rid of a vendor that produces a portion of that cost of goods, guess what? You got to replace that vendor with somebody else. And you know what? Everybody has so much competition with these vendors. I mean, you go to Marchand, you go to Luxottica, these frame companies, they all kind of have the same thing at the same quality at the same amount. So cost of goods is probably one of those areas that you should look at and look for big problems. But it's difficult to tease those out. Okay. So that's the second thing. Third thing is payroll. Your payroll next to your cost of goods is going to be one of your biggest, expenses. I have set up my chart of accounts to dissect out, if you will, your total compensation for each of the entities within the practice. So we got the shareholder, we got the owner or owners at the top. Then we have associate doctors next under that. And then we have staff. And then we have a fourth level of what I'm calling them compensation expenses, not payroll expenses, compensation expenses. And I'll explain that in a little bit. But that fourth level is often a clinical director. Some of my bigger practices, they need that office manager to oversee their $6 million location with 8 doctors and in 3 locations. They need that person that's not really management and not really staff, but takes up a big chunk. Then after that, you can tease out what the owner should have, what the associates, what the staff has. And if you really want to get technical, you can tease out what your office manager does, run those metrics, run those KPIs against standard metrics out there, and then you got something. So that's the third thing. What was the fourth thing? Just general expenses overall. And some of the biggest expenses fall into what we call the business expense category, which is the 6,000s category. That's how the chart of accounts is numbered. You go to 6,000, anything starting with 6 is general business expenses. You want to start looking, hey, how are my advertising costs? What is my, you can't do much about your utilities really, but you can start looking at things like travel costs. What's another good one? I don't know, just office expenses, meals and entertainment, how much you're spending on trips and things like that, professional education, stuff like that. One of the things I want to go back to is compensation category.
Yeah.
What I like to do, and this is really good now that PE is such a big issue, is tease out the expenses that are to the doctor and that are to the staff that aren't business expenses. Okay, I was taught this a few months back, and it made a lot of sense. Because PE or anybody, a young associate who wants to come in there, is going to say, okay, how much of these final expenses that lead to this net can I replace by being the doctor? Or if PE wants to bring in another doctor, we put all the doctor expenses together. So instead of having a payroll section, I have compensation expenses where it includes payroll as a subcategory, summated. What's the next one? I can't even remember. Payroll, insurance. I'm sorry. Woo, recovered. Payroll, insurance, which is kind of payroll. And then the final is professional fees. Because those are the numbers that we want to bring back out and figure those out to the overall valuation of profitability. So,
and the professional fees being for the employed ODs in the practice?
Yeah, typically you'll have professional fees for the owners, you'll have professional fees for the practice, you'll have professional fees for the staff. So professional fees, obviously, licensure, optometry licensure, professional fees like memberships.
Got it. Okay.
Local, things like that.
Yeah. Okay. And I think, a few things to pull out from what you just said is that you can't compare your own practice in all these different areas unless you have some sort of standardized chart of accounts or standardized categories.
Correct.
Like if you have 100 of your own, custom categories that fit your own mind, like you're not going to be able to take your profit and loss or your income statement and compare it to the optometry profession as a whole or any other practice similar to yours. So that's one important point. Another important point is that for the owner doc, your compensation is an expense in the practice for the work you do as an employee. A lot of times you see that there's this owner's comp, earnings before owner's comp. And I see that's easy. It makes it really easy for an owner optometrist to understand like what dollars they're actually taking out of their business.
Yep.
But the reality is they are two things at once. They are an employee doing employee type work, and they are a shareholder. Those are two separate people essentially in one person. And in order for you to really know like how profitable your business is as a shareholder, you have to separate, you have to first pay yourself a market-based reasonable wage in the practice for the work you do as an employee, as a practitioner, and as a manager, as a leader. And also you have to separate out what is the true profit of the business.
You got it.
That's the only real way to know how your business itself is operating, is to separate those two out.
Yep.
And Okay, so we talked about the P&L. Anything else that they should know about the balance sheet and the cash flow statement?
Cash flow statement is really misleading. And there's two methods of analyzing a cash flow. I literally, even after taking my bookkeeping courses and learning about this, I literally had to go to YouTube and review about 4 or 5, different things. And I kind of defer to people like you to really get an understanding of how to interpret it, because you probably know this. There's 2 types of cash flow statements. There's an indirect method of figuring it out and a direct method. So I'm not going to claim to be an expert, but I do know a little bit more. That I get sometimes these panic calls from my clients saying my cash flow looks terrible.
Yeah,
I'm losing money every month, or this isn't even worth it because I'm only taking this much. There's so much more to a cash flow statement than what meets the eye, and you really almost have to take a course in just having to.
And I think it can be confusing. Like there's negative numbers that are not really negative, and like it's not really intuitive. Let's talk about the balance sheet. Like what should they know about the balance sheet? And I'll go back to looking at cash flow in a second, but let's talk about the balance sheet. What should they know about that?
Well, let's start with what a balance sheet is. Balance sheet is assets, liabilities, and equity. And if you want to know the basic accounting functions, assets equals liability plus equity. Okay, literally the most basic thing about bookkeeping, and that's what it. Literally the first day of my instruction or whatever. Assets pretty self-explanatory. I think that they should know that when they look at a balance sheet, especially in the assets column, that what is there is true of what's actually out in the real world. And I can give you some horror stories because of improper bookkeeping and by clients who come to me saying, oh yeah, we're really good about reconciling, but they have transactions still in the bank feed from 2-3 years ago, and they're not reconciling everything. So those go to the balances on your balance sheet. And I think the worst, I'm going to give you worst case scenario, and it actually happened. We took over it was a large practice. We took over a set of books, and on the books, it said that the doctor had $1.4 million in his primary checking account. You know how much he had? About $60,000. Okay, so that is an extreme example of how things can go kitty wonkus real quick if you're not professionally upkeeping the books, you're not current, and you kind of try and do this DIY without the proper background and education.
Yeah. I
always say, these optometrists, they know that they have a problem, but they always, I get this all the time. Wade, I kind of don't know what I don't know. And it's a very, very common thing. And here's another little snippet here. I always say, you know what? That's common. You're not professionally trained. It's not your forte. You're not a subject matter expert on bookkeeping. Go keep doing what you make $200, $250 as a result of your training in optometry. Go do that and offload this, outsource it. I'm a big outsourcing fan, of course, to somebody who knows, and you can get your time back. You're more secure in what you're filing with the IRS, and you don't have to do it on weekends. Okay? Let somebody at a lesser rate do that. Use that time to go see patients. So that's just one thing of the balance sheet. Well, let's look at liabilities. The biggest thing that I would say that's incorrect over on liabilities is probably your payroll liabilities, because it depends how your payroll is set up. In that when you record payments, who does it go to? Does it go to which doctor of those 4 entities, or which entity of that compensation that I talked to? But then which liability does it go to, as far as, is it a federal tax payment? Is it a FUTA tax payment? Is it state or SUTA? And then you got all those other subcategories that are run through payroll. Well, here's the biggest problem that I see over there. Payments are made to liability accounts when the liabilities accounts are being tracked over by the payroll service. So basically, the amounts that are coming through aren't liabilities because they're already paying off the liabilities that's tracked over in the payroll software. They're expenses. So I will get books that are horrendously off when it comes to payroll liabilities. Well, remember, payroll, all these liabilities go on the balance sheet, and the balance sheet is the true valuation of your business. So if you're out there trying to figure out your net worth, how much equity you have in the business, or if you have, associate suitor or PE suitor, they're going to look at this and go, this is way off. I can't use these numbers. That goes to the premise that we said earlier, that your financials are more important than just yourself. Now you got other entities who rely on the accuracy and currentness of that information. So that's just beating a dead horse as to why, it's.
So
if I could just finish my thought here.
Yeah.
I talk too much. I know. But that third part is equity. Equity is a little hard to track, but the biggest thing that we like to track in equity is owner contributions and owner distributions.
Yeah.
And we like to close off those contributions and distributions for each end of the filing year period. Okay. And that way, when your CPA or your CFP looks at your books, they're not looking at owner distributions of $3.4 million because it's never been closed off per year. And you got 20 years of equity owner distributions on the books. Now, anybody who's looking at the valuation is going to have to go in and say, I just want to see the last 3 years. You got to close off the equity portions of that balance sheet to know what you referred to either earlier. The optometrist that owns the practice is an employee. That's payroll. He's a shareholder. Now we got to look at equity, and that's on the equity statement.
Yeah.
Mic drop.
So I can imagine an optometrist is listening to this and wondering what is even going on. The head is spinning.
I talk fast.
And I want to highlight what you just said, in that for the OD practice owner, like your highest and best use, your expertise is not in bookkeeping. It's just not. And it's not the best use of your time in your business, or frankly, out of your business. Go spend it with your family. Go do anything else. This is such a critical part of your business, because as Wade, you mentioned earlier, like you have to look at these and make decisions based on what is happening in your business, or some other entity is going to look at it, whether it's a buyer or a lender or someone else. And they're going to have to look at it and make decisions. And what your decisions are only as good as the information you have.
Perfect.
If it's not accurate, how useful are the decisions going to be? And if you're always wondering whether they are accurate, how useful are those decisions going to be? So this is something that I always harp on left and right, is that work with a good bookkeeper early and often. Get this off your plate. This is not the highest and best use of your time. And one thing I wanted to ask, one other point I'll make is that outsourcing or delegating the bookkeeping itself does not mean you're never going to look at these statements. But your highest and best use is to look at them, analyze them, and make decisions. And I would say the same about your tax professional, your CPA, your enrolled agent, and your CFP if they're working with you in the business. Like, your collective task is to take this information, look at it, and to make decisions based on it. Not necessarily to collect it, arrange it, and correct. And you're shaking your head away.
No. I'm saying you're absolutely right. And I'm going to add an optometry metaphor that's going to stay with you and stay with everybody who's listening for the rest of their lives. Okay. Bookkeepers are pre-testers for financial data, meaning the optometrist is not at the front desk collecting information on their insurance. They're not pulling authorizations. They're not scheduling exams and follow-ups. They're not adjusting glasses. They're not doing dispensings. They're not doing contact lens trainings. Literally the same analogy holds for your financial data. The optometrist, the DIYer, who ultimately gets him or herself in trouble, is spending too much time doing that kind of thing, where what they should do with their financials is exactly what they do as doctors. They get the information, and it better be accurate. That pre-testing information from all those expensive machines in the pretest room better be accurate to bring to the doctor to make medical decisions on treatment and plan. Same exact scenario goes over here with your financial data. Let a company like us do the data collection, present it in a fashion that allows interpretation comprehensively, of course, and very knowledgeable to take that information and do exactly to your business what you do with your patients. Be a business owner and not a business worker. Be a doctor, not a tech or a front desk person. There's your analogy. It is so similar. It's amazing.
Yeah. And with that, we'll end the episode. No,
that was it?
Yeah. So I hear in conversations, in my own conversations and from others, in that the owner will, you'll talk to the owner and you say, okay, are you working with a bookkeeper? No. Are you reviewing these regularly? Are you reconciling them regularly? No, I just let them get into QuickBooks and I'll let the tax pro deal with it at the end of the year. And for all the reasons you just mentioned, plus it's really expensive because now your tax pro has to do this task at the end of the year that they really don't want to anyways and don't really have time for, that doesn't help you make decisions in your business throughout the year. Because who knows how accurate or if it is in any way, shape, or form correct that information is every month of every year. Who knows what's slipping through the cracks and not getting onto those statements. Like you mentioned, who knows which accounts are not even connected anymore to the bank accounts or to the credit card websites and not even bringing in that information anymore. So it can just lead to a huge mess, and you owe it to yourself to give yourself accurate information, like you said, to make good decisions in your business. And leads me to my next question is, how often, assuming these are accurate, how often should an optometrist look at these documents? Like what's a good cadence to get used to?
I would say at minimum every 3 months. Okay. You're going to look at quarterlies, and then hopefully you have accurate data in the past, and you can analyze things from that level, maybe even compare them to quarterlies from years past. Optometry is not like, a software company or technology or a car company or something like that really moves fast. So you do have a little bit of time. You don't have to be in your books every day, but we certainly want you to review your books more than once a year.
Yeah.
So between 1 day and 1 year, what's it worth, that happy medium? I'm going to land on about quarterly.
Okay. And you're looking at a quarterly range, maybe year over year, to see what you're doing this year versus last year. Okay. When does it make sense to look at longer time periods, like rolling 12 months, or like a whole year to year period? Like, is that an end of year activity? What are your thoughts on that?
I haven't actually given that much thought. I would probably defer to somebody like yourself and work together. What is your idea? I'm thinking once a year. I mean, longer periods demand or require longer reflection periods. Does that make sense?
Yeah.
It's a good question.
I think it's helpful to look at that because it will smooth out any monthly or like seasonal lumps that can come either in purchasing inventory or just in revenue. So I think it's helpful to look at that along with maybe quarterly, but definitely at the end of the year, you kind of want to compare it to years past.
I would say end of the year, but I would actually even say before the end of the year. I think September or October is probably the latest in the year that you want to start looking at this. So let's go, I don't know, you can agree with me or not, because I think September and October are the perfect time to review annually that 30,000 foot view.
Yeah.
But you have to kind of include the good work that people like yourself do, Evon.
Yeah.
Because the optometry office, of course, is so integrated with the personal income and what the person wants to do personally that I literally envy the work that you do, because you take that financial data and then you extrapolate it not only onto and within and forecast it to the business, but now you take all that information and you apply it to the aspirations and that long-term goal of the practice owner on his or her 1040s.
Yeah, I mean, that's talking about like needing good information. Like if you as a practice owner are going to be working with an advisor, and we are trying to make decisions around long-term decisions around cash flow in the household and in the business, or long-term decisions around, and if I'm going to have a tax projection running throughout the year, and a big part of that tax projection is going to be that net income and salary wage from the business, that projection's only as good as the information that you provide us. And so that is another great reason why, if you're working with any professional, in order to really get the value from that relationship, like you got to be able to provide good, accurate information. And that's across the board.
Let me tell you something. We'll maybe end on this or whatever. Hey, it's your podcast. You tell me when to end. But
Yeah.
these things come to me.
Yeah.
Listen, if you're out there and if you're listening to this and you're an optometrist, okay, I believe, and this is coming from a bookkeeper who spent 25 years plus doing this, okay, had all the responsibility of a younger OD just taking over this, okay? There's really 4 things that you should be concerned about and that are going to be most impactful to your bottom line and the type of life that you're going to lead. Can I say that?
Yeah.
The quality of life and how much time and effort you want for the income that you can use personally. Okay. Yeah, that was pretty good. That wasn't rehearsed or anything. So here's the deal. I think you need 4 components. Every new start, and even if you're an old start, which means that you've been around for 20 years, I think you should have 4 entities in place for your optometry office / personal life. Okay. Get a billing system in order. Okay. This is from left field. We haven't talked about this, but you have got to protect your top line. Okay. And I usually say that as awesome as bookkeeping is, and I literally have built my second career, you should have in place at the same time a good billing service. And typically you can hire a billing service better than you can do and cheaper than you can do by having an in-house person. Because listen, the reality of life is that you can cut expenses and you can do with payroll what you want, but there is nothing, and I'm telling you, substituting for a good top line. And that means getting paid, especially getting paid for the services you've already done. So I think it's imperative that the practice owner have a good way of collecting those monies that are already due him or her. Okay. Yeah. Then do the bookkeeping for all the reasons that we've done here. Okay. That we've talked about here. Don't need to beat that horse. Get yourself a CPA, because that CPA is going to have an immediate effect on the taxes, and taxes can be significant. And then the final part of the puzzle, folks, is a person like yourself, Evon, who puts it all together and then really takes that information. Again, I'm envious of the things that you guys can do with the data that we provide to really go towards quality of life. So you got to start with top line revenue. You got to start with organization. You got to address taxes and let your CFP come in at the end of the year, and he or she will put everything together.
Love it.
And happily ever after, right?
Love it. I love it.
There you go.
Yeah, I love that, Wade. Really appreciate those thoughts. And again, like it doesn't matter like who you work with. Okay, we'd love you to work with Wade. Like I'll put all of Wade's information in the show notes. Reach out to Wade, talk with him. But as long as you're working with someone to get these things done and done right, this is an investment. Your bookkeeper, your accountant is an investment. It will free up time. It will free up space in your brain. It will allow you to work more intentionally in your business and just spend more time with your family, community, whatever else it is besides managing the books.
And I'm just gonna back that up and say, please have somebody do it. Please, because all that time and energy, usually 99 times out of 100, results in bad books anyway. Just take the hit. Okay, it's a hit, but it's not an expense, guys. It's an investment.
Yes. A couple more questions for you, Wade. So one thing I want to ask about is we talked about, okay, this statement of cash flow, which isn't always easy to read and understand. Cash flow is obviously important in any business or in any household. I mean, you can't really do anything without cash. You can't survive without cash. You can't invest without cash. Sure, you can take on a whole bunch of debt, but eventually you're going to need to pay that debt back with cash. So how should an optometrist, also the cash flow in the business, money coming in, money going out,
Sure.
can and probably will look different than what you're seeing on an income statement, on a profit and loss.
Oh yeah.
Due to accounting tricks and tax tricks and tax planning. So there's going to be some differences there. You can't always rely on the profit and loss. So how should someone look at watching how much cash is in the business, where it's going, and where does it need to go next? What are your thoughts on that?
That's a hard question because it kind of goes back to the interpretation and the difficulty of reading that cash flow statement.
Yeah.
It really is. Now, correct me if I'm wrong, okay? And I've actually never done this. Is a cash flow statement acceptable if you're doing cash method accounting and then looking at the profit and loss? Oh, I said profit and loss, income statement. You know what I'm getting at, right?
Yes, go on.
Is a cash flow statement needed if you're doing cash basis accounting, and then you can look at the income statement and there's your cash flow statement? Is that correct?
No, the reason is because the way that cash is used will look different than how it's going to show up on the P&L. And the reason why I say that is because things like debt, for example, debt in the practice, when you make your debt payments, so the full payment's going to come out, but on the P&L only interest is going to be on there. Same thing with like depreciation. If you're buying equipment and depreciating it, so there are some differences there.
Yeah, and that's what I thought too. And I heard that, and I figured, I got you in here. I'll ask you that. I'm like, there's no way that's possible.
Yeah.
So most optometrists will kind of prefer the cash method accounting over in QuickBooks. Guess what? I have over 70-something clients right now, and not a one are on cash flow method. You know why?
Why?
Because we get a more accurate view of true assets, liabilities, and profit and loss that go to the cash flow statement if we do accrual. But if you want to view those same records as cash, all you have to do is run the same darn report, and QuickBooks has which method?
Toggle.
It's a toggle. It's a switch. It's a toggle switch. You can review it in both.
Yeah.
So I heard this comment. Yeah, all optometrists, 99% of optometrists will do cash method accounting. I'm like, well, not so true. Not so true. Yeah. You can do either if you set it up. I guess you can set it up both, but you can do either when you have QuickBooks. That's some of the really, really nice. That's a nice aspect of QuickBooks.
Yep.
So the answer to your question is it's complicated. How's that for weaseling out of it?
Yeah, there is no one way, right, to keep track of cash. You know, it can be as simple as if you're making your own spreadsheet and just tracking how much cash is in the business. Where do you expect it to go in that month? Where do you need it to go that month? And then what's going to happen the next month? Like, it can be that simple. There are books out there if you want to sort of rely on some books. I know some of them are more popular than others. But I guess the main takeaway here, because we don't really have a perfect solution, is just make sure you're looking at your cash flow and not just in profit and loss. Make sure you have a way, in whatever way that works for you. Maybe your advisors are working with you to do this. But just take a look at how much cash is in the business. Where is it going or expected to go in that month? Where do you need it to go next? Set it aside for tax payments, making sure there's enough for debt payments, making sure you're having a way to fill up the cash buffer that you need in the business and plan for that next investment. And then, is there any left over to distribute or invest in yourself outside that practice? So just have a way to do that and look forward, because just looking at the bank account doesn't quite give you the accurate health of where your cash is. And the profit and loss can look different. Even inventory is another example of that, where you're going to pay for inventory, but it's not going to show up on a cost of goods sold until they're sold. So depending on how that's done. So just keep an eye on cash flow. It sounds like we're not going to give you the answer in this podcast episode, but
I feel kind of bad about that. It's like the perfect resolution is to really dig down and really understand a cash flow statement.
Yeah.
But it's difficult because it takes some time. And the one thing a lot of my clients don't have is time.
Yeah.
So you
I
can,
may have to work on a spreadsheet for this for anyone listening, but
it's
yeah, just
something
keep
we could put together, you and me,
yeah.
huh?
Yeah, that's right. Yeah. Yeah, and maybe the takeaway here is just revenue is great. You need revenue. Profit is better. You want to keep as much of that revenue as possible, but cash flow is king. Like you want to make sure there's cash in the business and cash available to do the next things that you want to do. One last thing I want to get to before we kind of wrap up here is that how should a practice owner, or what should a practice owner see, or what can tell them when their financial statements are not accurate? What can they see as like a red flag, or just something that tells them that things are not all quite right when they're looking at this financial information?
Well, if they're DIYing it, they're probably not right.
So I'll actually maybe I'll start, because the first two things I'll ask, and that will sort of tell me, that will raise my antenna, are that number one, are you working with someone professionally that's doing this? If they're not,
Yeah.
I'm going to be skeptical.
Okay.
That's not to say that they're not right, but I will usually keep my eyes a little bit more open. The next question I want to ask is that when's the last time they were reconciled, and are all accounts being reconciled? That will usually tell me a lot too. But what can they see on them, or from your perspective, what should they think about that tells them like, hey, maybe this is not an accurate thing. I need to look deeper.
First of all, they got to look at that balance sheet. Okay.
Okay.
Balance sheet is the first place to stay, or first place to look, because that's going to have your bank accounts, your credit cards, your loans and liabilities, and then your equity. Okay. On those sheets, they got to look on paper what the doctor thinks they should look like.
Okay.
Okay. So you're doing kind of a 20,000 foot view, 10,000 foot view here, and saying, okay, I got things over here. And if, like I said earlier, you do not have $1.4 million in the bank, I think we can eyeball that one. Okay. So here's where it takes. Okay.
If you do, then you need to talk to your financial advisor, because that's maybe something that should be used
Right?
better than that. But go on. I'm sorry.
Absolutely. So I think you can use, remember I said, we're doing financials to make you a better business owner, just like that data is going to make you a better doctor. Okay. So you're looking at a patient. Let's do the analogy here. You're looking at a patient, that data, which may be, it might be suspect. Here's a good analogy. You got a patient in the chair giving you all this history. It's a new patient, and they got cataracts in their eyes, and they have this horrible disease of astigmatism, and they can't remember if they've ever had an eye surgery. Okay, you have to evaluate that kind of the same way that you look at your financials, saying, okay, I know the reality. Just like I know the patient, I know a part of the reality. I really know the reality. Do my books look from a 10,000 foot viewpoint like reality? Bank accounts, credit card liabilities. Hopefully there's not a lot of those. Loan amount, balances. Okay. Like 20, 30-year-old practices, they get loans. Are they ever zeroed out? Then payments might be going to a different loan. You just got to take that 30,000 foot view. Okay.
It's like a gut check. Just, okay, does this feel right based on what I've seen in the practice?
Does it make sense?
Yeah.
Does it logically make sense? And if you can't make heads or tails out of your balance sheet, then the next thing that we look at, of course, is the income statement. And that's probably going to be wrong too. Don't just look at that top number. We addressed 4 different areas. Drill down a little bit. The nice thing about QuickBooks Online is that you can produce these reports at a click of a button. And then for each individual area that's suspect, you can drill down. So let's step back here for a little bit and address the question, what on the income statement should I look at? The report that I give to all my clients is a profit and loss by month. Because when you look at that spreadsheet and it's 12 months long with a final tally at the end, that 13th column, now you start looking at trends. Okay. If your frame bill is 10,000, 10,000, 10,000, 80,000, 10,000, 10,000, 10,000, and so on down the rows of your profit and loss, there's probably a problem. And again, that's more of a 10,000 foot view where you can start using these things to identify. And this is kind of how the CPA does it at the end of the year. They take that flyover view, look for big problems that stand out, and then go and research more. Well, the cool part about bookkeeping is those problems don't usually occur because we're in there every day sweating the minutia and the individual transactions, and hopefully it never gets to that point. And those reports just naturally populate by themselves because we're diligent, we're current, we're knowledgeable, we're accurate.
Yeah, I like that. I think that's super helpful and brings up a different or another good point in that, like, these are like these statements, this information is like a reason to just ask why and dig deeper.
Yeah.
Like you want to, okay, why is this category increasing? Dig deeper. Why have my collected revenues increased? Dig deeper. Why are certain categories changing? Dig deeper. Like, this just a reason for you to ask questions and dig a little bit deeper. And then to look at it, pair that information with what you said earlier, because this is all the past, like past information. So you do need to pair it with what, Wade, you mentioned earlier, with what's going on in your practice management software. What are some practice KPIs that are more forward-looking, like revenue per OD hour or revenue per staff hour, schedule health, like all that stuff that's more about the business health, and how do these financial statements fit together with what you're seeing in the business? And I guess we'll wrap up here, and I'll say, for those who are listening, clearly you and I feel pretty passionately about the importance of bookkeeping and the importance of just helping a business owner manage their business better and make better decisions. But what are some final thoughts that you want to leave with a practice owner, and then we'll wrap up from here?
Final thoughts. What an open-ended question. Oh, geez, where do I start? Don't underestimate one of two things with your bookkeeping. Don't underestimate the importance of bookkeeping. And I think we've kind of hit that pretty hard here today.
Yeah.
But don't underestimate the confusion and complexity of it.
Yeah.
Because I think I'm making a little bit of headway in kind of showing optometrists that it's more work than it actually is. I've always been under the thought, and I was guilty of this too for 25 years. Bookkeeping was always an afterthought for me, in that, oh my gosh, I'm a big bad optometrist. I got those letters behind my name. I can do my bookkeeping. Well, you can do it, but you have to have training, and then you have to fight the powers that be that are the software itself.
Yep.
And we get lulled into this. Well, I've seen these advertisements on TV where all I do is get the software and it does all the work itself. I think that's the biggest misconception that leads to the notion that bookkeeping is not important because it's easy to do and I already have something in place to handle it.
Yeah.
I would stress that if you don't have training, knowledge of the software that you're using, you're going to make mistakes. And back to the cockroach analogy, if you see one, there's 1,000 more in the walls. So two things. That's what I would leave you with. The importance and how confusing it can get. And that in the end, it's, for the most part, I'm speaking generally, I might get some some pushback on this, but in the end, you get financials that you can't do anything with. And now you've spent your time, your effort, your frustrations, or a staff member's frustration. All of that goes to the end, and you're still giving your CPA or CFP at the end of the year stuff that they can't use and they got to go in and fix.
Yeah. That just reminds me of, me doing my own books and my own business. Like, okay, you've got QuickBooks. It's so convenient because it brings in all that information from all these different accounts. But how much time do you need to spend recategorizing stuff because it's not categorized properly? And even all the rules you can build, like, you need a human brain to go in there and create the rules and then test them and make sure that they're reviewed and done accurately. And then how much time you need to spend researching, like, how to do stuff appropriately when it comes up. That's just time that, as a practice owner, like, that's not your best and highest use of your time. Okay. It's not where your value is.
And then let's address how it's always been done for 120 years in this profession. We turn it over to our CPA at the end of the year, or we turn it over to somebody like yourself going, hey, I need to get my life in order. Here's my books. And you're looking at it going, I can't make heads or tails.
Yeah.
How much do you like to do bookkeeping,
Yeah.
Yvonne? How much bookkeeping?
There's not much. I like to do less than bookkeeping.
Thank you. And the
Yeah.
CPA, for the most part, is the same exact way, yet we rely on him or her to take care of our books to do their jobs. That's my point.
Yes.
They don't like to do it. And they'll charge you an arm and a leg to do it. And then they still won't do a in-depth deep dive on doing it.
Yeah. Well, this has been awesome. Where can people find you, follow you, learn more about your business and what you're doing?
I am prevalent. I'm too much on social media. I'm over on Facebook personally. I got a business Facebook page. Go over to Odie's on finance. I'm there a lot. DM me personally. That's probably the best place to get a hold of me immediately. You can go to my website. I do have a Calendly link. You'll maybe put this in somewhere or whatever. Yep. Honestly, the best place to get a hold of me, the way to answer this is go to my Calendly. I'm a slave to my calendar. You make an appointment with me, I'll show up. So that's the best way. And that's For Eyes bookkeeping.com/contact. I think that's what it is.
Got it. Well, I will put all of that in the show notes, which you can find by just scrolling down on whatever app you're using. There's a link that will take you to the Education Hub on my website. Check out all the show notes. Check out Wade and his business. And Wade, thank you so much for coming on. This has been, this has been awesome and really fun. And for the listener, thank you so much for listening. We will catch you on the next episode. Take care.
Want more resources to help master your money? Check out the Education Hub on Evon's website at optometrywealth.com. Evon Mendrin is a certified financial planner and owner of Optometry Wealth Advisors, a California registered investment advisor. All opinions of Evon and his guests are their own. This show is for informational purposes only and should not be relied on for specific investment, legal, tax, or other decisions. Clients of OWA may own securities mentioned on this show.